So we're currently in the midst of earnings season. How have things gone so far?
Yeah, so starting a bit closer to home, I run a European desk. So in terms of the Stock 600, it's around about 61% of companies in the Stock 600 have exceeded earnings estimates, which on the face of it sounds good, but it's actually a 3-year low. And the thing for Europe that I found interesting this earnings season is the price action around earnings releases. And what we're really seeing here is those companies that miss earnings are punished more severely than companies that beat are being rewarded. And I think that says a lot about the market psychology and the outlook for European equities in the second half of the year. I think Morgan Stanley, they made a good point, that they expect European equities to remain soft in the near term because the second half, if economic growth slows, that's really going to bite on sales and it's going to bite on margins. And just making a comparative outlook to the US, so that's 61% for Europe compares to 81% for the S&P 500, which is the main bellwether of the US, the US stock market. And digging a little bit deeper in there, the companies that have exceeded estimates above the 5-year average, but the magnitude of those beats are slightly below the 5-year average. And again, we're seeing relatively similar price action. The gainers aren't rewarded to the same extent, which the losers have been punished. And I think that says a lot about kind of what to expect kind of going forwards. And just like digging a little bit deeper into like the winners and losers. So the winners, IT, if you take a proxy such as percentage companies which are beating earnings estimates, that's top of class once again. But then to the downside, you've seen underperformance in utilities, financials, and energy. But when you kind of assess, US earnings season, basically, at what's felt like times this year, the US stock market is the so-called Magnificent Seven, which is basically this collection of kind of large cap, primarily tech names. And we're still waiting for Nvidia on the 23rd of August. But in terms of what we have seen, we've seen good earnings from the likes of Alphabet, Meta, and Amazon. Not so good for Apple, Microsoft, and Tesla. So it's been relatively kind of mixed performance, I'd say. And that's almost also kind of, to an extent, been reflected in the price action. The S&P 500, if you want to take the start point as when the big US banks started reporting, it was around about 4,500, and we're pretty much there at the moment anyway. So it's ultimately been a case of not bad, but not great. It's not been enough to kind of capitulate, to propel us higher above 4,500 materially, but it's also not been bad enough to kind of, see a bit of reversal of this bull market that we've seen thus far this year. And in terms of kind of like overall macro takeaways, the premature one potentially is that US consumer does remain relatively strong. And again, that's kind of a theme of tight labour market, but also people drawing down on their savings in the pandemic. I would caution that at the end of earnings season, you do get a lot of like the big US retailers like Walmart and Target, those sort of companies. So let's see how they play out and see how that kind of guides us from a macro standpoint into the second half of the year. But overall, from the consumer perspective in the US, things are looking relatively upbeat.
I mean, how do you assess the risks of the US stock market? So you obviously talked about the goods. What are the bads?
Yeah, so if you think about the journey that we've been on so far this year, we're up around about 17-18% year to date for the S&P 500. And on my previous appearance on the show, I kind of made the point that's primarily been a byproduct of these gains in these large cap tech names. And obviously one of the thematic issues for 2023 has been this AI craze. So that's been a huge driver of price action. Then also for some of these companies, the repositioning of portfolio managers from their relatively downbeat views that we saw last year. Then also some of the margin protection measures, if you want to call them that we saw earlier in the year, such as the mass job layoffs at companies such as Meta and Alphabet. If you combine that with the Fed liquidity efforts that we saw around about the time of the March regional banking crisis, that's pretty much got us to where we are. In terms of short-term drivers, part of the recent market narrative has been one of capitulation. So as we went through the second half of the year, we saw a lot of the analyst community kind of reassess their views on the S&P 500. They're clearly caught off guard by the rally that we've seen year to date. And we've seen some of the big Wall Street vocal bears, such as Mike Wilson, throwing the towel on his bearish views. If you can kind of combine that with some, fund managers as well, also capitulating, do we get squeezed any more juice out of that? Does that kind of propel us higher? Possibly. But then also, as I mentioned, one of the main themes this year has been the AI revolution, if you want to call it that. And if any of these large cap companies come to market with AI products, I think the price action around that will be relatively interesting. We've seen some, at what times felt like pretty crazy gains off the back of like a PR release or a new product. Is that something the market is still happy to buy up? But from, so that's one thing I'm watching. But from a broader macro standpoint, I think it's all about the growth story. I think if growth holds up well in the US, do we get the Fed coming back later in the year with an interest rate hike potentially in, say, November? And at that point, does that serve as an inflection point for the rally that we've seen thus far? Do people say, okay, well, those 2024 rate cut bets, they're going to need to be pushed back. We're going to need to reprice accordingly. Valuation's relatively rich at the moment.
Yeah.
Do we see a little bit of a pullback in kind of the price action in the stock market? Conversely, if inflation, if growth doesn't hold up as well, but inflation pulls back, then what that could actually do, yes, we may see a little bit more of a dovish Fed possibly, but what that'll also do is it'll put a bit of margin pressure on corporate America. So, they've had a lot of pricing power during the inflationary boom. That will kind of begin to dissipate. And, how does that kind of affect corporate America? And then also, also look at the yield curve in the US. So we've seen the entire yield curve above 4%. Yeah. Does that weigh on some of the large cap tech names? If that is sustained, they're very sensitive to interest rate risk. Does that then see some underperformance in the NASDAQ relative to, for example, the S&P 500? Conversely, if you take an index like the Russell 2000, that's very much, more representative of the underlying health of the US economy. If growth does begin to falter, do we see a bit of underperformance in the Russell relative to the S&P 500? I think these relative index plays, are going to be more thematic as growth slows in the second half of the year. And then also as well, from like a sector standpoint, cyclicals have vastly outperformed defensives. I think they're up about 18% year to date. Defensives only up a smidge. Does that kind of reverse a little bit? Do we see kind of almost like a flight to safety into some of these more defensive natured names? And then it was like a broader regional overview. I'll also be, keep an eye on China as well. Obviously, you would, but anyway. But there's this interesting, at times, kind of regional play that we've seen. So when China's faltering, the Eurozone has more economic exposure from an equity standpoint to China than the US does. And on some of those days, you've seen Europe underperform relative to the US, and some days you've actually seen the US up. And do we kind of see a resurrection of this kind of Tina theme, which is there is no alternative? And if growth slows in China, do US equities almost kind of gain this kind of safe haven appeal? Yeah. These are the kind of things, the questions in my mind, from the top level down, what's the broader macro backdrop, how's growth in America, and regional kind of plays between different indices.
Some absolutely brilliant insights there, Adam, so thank you very much. And don't forget to like and subscribe and join us next time.